Welcome to the end of day review for Friday, the 29th of December 2023. As usual, starting off with the economic calendar, as you can see, there were no red folder news events and thus it had no impact on our trading for today. Then jumping into the actual chart, starting off with the daily, as you can see, market structure remains confirmed bullish. However, there was an error that I did make yesterday and something I didn't take into consideration, and I guess this is just as a result of not doing fresh markups every day. But as you can see, this was yesterday's candle, Thursday, the 28th of December 2023. And what you can see here is that a daily structural point or structural liquidity point was swept. This is a significant area of a significant area in terms of being targets for ERL continuation momentum scenario, and since that target was reached yesterday, it essentially invalidated any further longs for the day, and thus shorts were at play, which then means that the loss that I had marked out yesterday as such is no longer valid because any longs for the day were invalid and only shorts were valid. But what I said for the shorts in terms of getting into an entry, that was still invalid, because just because from a theory perspective we can't validate trading longs doesn't mean that the GA doesn't exist to support longs and that price couldn't go higher. It's just in terms of our trading plan, it doesn't really, or it isn't really high probability to long. But yeah, that would have stopped us from longing, and then in terms of shorting, our rule set wasn't met. So yeah, nothing really changes other than the loss could have been avoided. However, if you took the trade and you missed this aspect, then you know it's a learning point, something to be aware of going forward. And if not, then as long as you stuck to your trading plan, then perfect. Yeah, so then in terms of today, we have pulled back, and if we look at the 4 hour, what you can see is that yesterday we did have this 4H OB, which was a valid OB because it actually broke structure with a body break. So it's a valid OB, and then we had a body break breaking that OB, validating the 4H pullback phase. However, what we do have to be aware of is the fact that we likely this is likely the pro-trend confirmed extreme. However, we can't really confirm it because um, we don't actually have uh, a confirmed swing high point just yet. However, it's pretty obvious that it's likely the swing high point because we are pulling back, and if today closes bearish, then even if it doesn't close bearish, as long as the wick is below the previous day's wick, then we have a confirmed high point, and that essentially means that the pullback phase has achieved its target of reaching the pro-trend confirmed extreme. The reason why I call this the pro-trend confirmed extreme is because we have a chain being mitigated all the way up to this point. However, what you should note is that in terms of this candle, it's not considered a mitigation, and the reason why I say that is because if we pay attention to these candles, this wick is higher than that candle's wick, and that candle's wick is higher than this one, and thus this is purely a liquidity grab and potentially liquidity in the leg for the future. So in terms of navigating today, we essentially started the morning out here somewhere, and at this point I was taking into account the weekly bias, which I'll go through when I go to the lower time frame, which doesn't enable me to take any short trades on this Friday in particular, and thus we then come lower down into this pro trend confirmed OB from which we can then long. So we can't short for today, even though this is quite a nice short. Longs were definitely on the cards. So what I'll do now is go into the 15 minute and I'll explain this weekly bias. The weekly bias is essentially that we have a bullish week, and we know it's a bullish week because Thursday essentially confirmed that it is a bullish week by breaking the current day, the current week high of the day. So if you look at it, Tuesday's high was broken by Wednesday, Wednesday's high was broken by Thursday, and thus it's more likely than not that Friday will indeed close bullish. As a result of this, and the fact that on the daily we don't actually have consecutive bullish candles to actually validate that Friday may form the top wick for the weekly, because yesterday we had that bearish candle essentially breaking that chain. What that essentially means now is that for the purposes of trading Friday, we can only trade long as it's anticipated that it will be a bullish week, and we already had the top week form, so it's unlikely, unless we're going to take out the low of the week, which is also low probability, it doesn't make sense to actually trade shorts. Then in terms of the 15 minute, what you can see is from the morning we pushed down into this Pro Trend Extreme POI, which was pretty good. We then had a, well, on the 15 minute there wasn't much to unpack, so I'll move on to the 5 minute where we can identify some primary legs. Remember, this is a Pro Trend OB, and this is a pullback phase primary leg, last point of supply that we can trade from with 4H backing. And essentially what you can see is we reached this OB, we then had a break of supply, which is a change of character, and that validated this primary leg. From this primary leg we then had this demand OB. However, by the time price returned to this level, what you can see is a secondary leg was formed from this pullback phase for HOB, which then invalidated us from actually taking a trade immediately from here. Something along the lines of that would have been valid. Like I said, we weren't concerned with trading shorts, and then we then validated another secondary leg. However, at this point New York had already started and we had to consider the London range. What you can see in terms of the London range is the low of the London range wasn't wicked by New York, and as a result of that we couldn't actually validate taking any long trades, not until one side of the London range was taken out, and that was taken out just before, 30 minutes before the cross on a Friday. That's the 29th of December. It really doesn't make sense to take any further trades for the day, which I guess brings me to the end of day review for Friday the 29th of December 2023. The next end of day review will be done in 2024, so we'll chat again soon. I guess we'll chat again in the new year.